Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for your daily cryptocurrency market update. Every single day at 1 p.m., we deliver a market update where we don't just look at the cryptocurrency market, but we look at the broader economic landscape surrounding it and try and work out where this market may or may not be heading. So before I start this video, guys, if I can ask you to do me a massive favor, smash that like button, leave me a comment. It really helps me with the algorithm. And if you're not already subscribed, it is well worth doing so to stay up to date with the cryptocurrency market and what it's doing. We've also recently started a daily news update where we try and cover everything that's happened within the cryptocurrency market over the past 24 hours every single day at 10 a.m. UK time. So let's get into it, guys. We are going to be looking at Bitcoin. We're going to be looking actually and spending quite a lot of time looking elsewhere outside of the cryptocurrency markets in this video, looking at things like housing, looking at some shocking data revealing that retail has piled into the US markets this year. Now, is this a bullish or bearish sign? Typically, retail is not necessarily the side you want to be on, as often it finds itself in opposition with quote unquote smart money or institutional money. However, if you look at March 2020 period onwards, actually retail played a large part in that rally, and of course are playing a large part in the rally that we've seen since the start of the year. So we'll look at is this bullish or bearish? I'll give my take. Look at bankruptcies. So we've seen the most amount of bankruptcies since 2010. I think you're getting a lot of data out there that suggests we're in a very similar period, whether it be yields to 2007, obviously right before the crash. But there is this thing in the back of my mind that thinks that this time is just simply different. When have we gone through a lockdown period? You know, China essentially has been very much locked down for nearly 3 years now. There's going to be a compressed reaction when we're already seeing it with them reopening and obviously the economy moving forwards. And then we'll look at housing. Also, I want to just cover this. You know, this was something that was talked about on CNBC the other day, or Fox News, sorry, and it talks about reaching a $52 trillion debt ceiling by 2033. And this is how fiat currencies end on a mass debt default that is largely led by a sort of detrusting, a waking up to just how corrupt and full of BS the fiat systems that we currently have are. They're inherently inflationary and will result and end in a death spiral of debt. This is some pretty cool news. Hong Kong outlined a plan to let retail investors trade digital tokens like Bitcoin and Ethereum, a major step towards its goal of becoming a crypto hub. Everyone's wanting to become a crypto hub. Part of that is them regulating the space, which is why we came out and said, actually, we were rather bullish on what Gensler was doing, even though there will undoubtedly be casualties. You can see here that the SEC has a stablecoin firm in its sight, so it's referring to Paxo. Paxo are essentially responsible for $137 billion of within the market, and this will really shake things up. So let's get into it. I want to start with the Bitcoin price. You guys know that we have outlined and set aside a head and shoulders pattern that we set aside a while ago. Before we'd even broke here, we said this is what we would like to see, because a head and shoulders essentially is a reversal pattern on top of all the other reversal or indicators that were essentially leading us to believe that the bear trend was a somewhat weak one, or becoming weak and losing sort of conviction. So this is really what we outlined, and you're following it very, very accurately. Now, I just want to talk about a little bit of a risk, because there is the potential that the neckline is out and that this is the neckline, and we're still yet to form this right shoulder. So there is still that potential that may be the case. But for now, we're going to take it that this is the neckline. It isn't a perfect neckline. It's not, you know, the one sort of moving things up is a lot neater. But for now, we're going to take it as this being the case, and that this potentially was your right shoulder, and you're looking and very much, I believe, set up for that upside. Over the last couple of weeks, or over February, we saw a repricing of interest rates and how markets were taking them, which caused most assets. You know, if you look, this is February, start of February, you saw a decline. We look at the NASDAQ, for example, you know, start of February, decline. Look at gold, February, decline. Dollar, February, up. This is as interest rates have been getting priced more aggressively due to inflationary data and other data suggesting that the Fed is going to need to be more hawkish. We've got the Fed speaking on Wednesday, which is going to be significant. And crypto during this time period, this is February, you know, yeah, it kind of sold off at the start, but then really regained and found itself. So it's been rallying on the backdrop of stocks going down, gold going down, and the dollar going up. Now, I do believe that Bitcoin essentially has broken out against the dollar. It's also broken out against gold. And of course, the stock market, the S&P is what we're using here. And there's a number of reasons, you know, the cryptocurrency market has something going for it that the likes of housing, which you could argue still has a long correction to undergo, and the stock market doesn't have in its favor. And that is the fact that it is an emerging market. It's an emerging technology and a technological revolution that is yet to even be regulated, let alone used in day-to-day life, like I believe it is going to be. A lot of money is going to get swept into that. You know, at one point we're going to wake up and the cryptocurrency market is going to be in the tens of trillions of dollars. It only reached 3 at its height. Remember, the dot-com boom reached 5.5 trillion back in the 2000s. And I think that's very much on the horizon. It's why we said there's actually a lot of bullish connotations or bullish implications to what Gensler's doing. So I'm looking for this head and shoulders to play out. This is a reversal structure on top of all the reversal signals that we had. One of the big ones, of course, was the RSI and this divergence. You've got to take that seriously. Really, the divergence is just showing that the trend is losing momentum. And of course, with such a significant sell pressure like FTX, you'd have expected a lot more momentum than what you saw, and kind of maybe conviction in this coming down a bit more. Instead, you got the opposite. We said you got to take that seriously back at the 15K range. And here we are. Of course, we have accumulated. Let's move on to a little bit of the. So this is what basically what we've got set out, and we think that this is going to take you. You know, for me, I'm really looking at it coming back to the sort of 28K range, and then actually, I think we're going to persevere above and beyond into this sort of zone here, and maybe top out for a larger correction. It's really what I'm looking at. You know, maybe we'd have a bit of a larger correction and then do something like that. That would be good, healthy structure, I think. But we'll see what happens. It's all scenario forecasting. But yeah, we're looking at this head and shoulders that we think has been confirmed. You know, there is the potential that your right shoulder is still to play out if we've got this neckline wrong, and this is the neckline here. But ultimately, that's just going to give me an opportunity to accumulate more crypto. If you want to find out about what I'm doing, how I'm doing it, feel free to join the Patreon, link in the description. Retail investors have piled into the US market this year. You can see you saw a massive increase in retail investors. This is from Alicio. Well, we're following guys, not only on Twitter, but on YouTube. And you can see you saw a huge jump up in retail interest. So there's a negative connotation to this between, is this just retail FOMO? Or is there something more behind this? Because typically retail finds itself in adversary of the institutions. So this is something that, it's kind of like, you know, for me, when Kramer comes out and has a similar stance on something than I do, I'm kind of like, please don't say that. You know, you kind of almost don't want to be on the side of the retail investor. But at the same time, if you look at, you know, sort of 2020 and 2021, you can see that retail really almost kicked the rally off. And there was huge involvement with retail, and that was a very, very strong time period from sort of the start of 2020 to the end of it. You know, you can see the sort of moves that Bitcoin made. So are we on for a similar thing? Actually, is there a lot of bullish sort of notions to this? Potentially. But interesting data all the same. Bankruptcies are on the rise. The US figures show 2023 had the worst start to the year since 2010. We still have a rather ugly macro backdrop driven by rates. There's lots of things going on with inflation. Chart of the day with the 26 million barrels released, confirmed last night. due to Congress mandate sales, the size of the US strategic petroleum reserves will drop to 345 billion barrels by mid-year, the lowest level since in 40 years. You're getting lots of data like this. Typically, I think it's not a bad time to enter a market after you have a high number of bankruptcies. The problem is, does this continue? Potentially. This was very interesting. This was reported on Fox News, and it's talking about how the US is set to reach $42 trillion in debt. So substantial. I think we're on 30-something trillion, 32 trillion at the moment, so nearly a doubling. I think they're being generous. I think it's going to get to more than that. And the problem is when you have that amount of debt, and remember, money is debt. It's how money comes into existence. So there'll be a hell of a lot more money, i.e. it'll be less valuable. This is why everything is just going to continue to go up whilst we live under a fiat system. There'll be booms and busts, but it's why people like Warren Buffett have essentially done so well, because they understand the monetary system and understand that if you invest in solid things for the long enough term, housing is a great example, although with sort of demographics, there might be a bit of a shift there. You're going to do well because the fiat system's in place, and this is how they end. They end on mass defaults and a lack of faith in the currency. But this is actually, I think, going to be more than a reality, and I think it'll probably be higher than that. And the problem is, imagine what the debt payments on that are. They have to keep interest rates at pretty much a zero level. Home prices to medium household income, your rates way above 2007. Lots of metrics suggest this. So are we going into a crash? Well, I think the time is simply different, and the sort of backdrop, so potentially not. And then, of course, the Hong Kong news we covered, and the SEC likely to continue going after Paxos. Paxos don't just have BUSD; they also manage a basket of products. We'll see how this holds up, and how Paxos holds up. Is that the next sort of FTX in terms of insolvency? I don't think so. Paxos are regulated by the New York Financial Services, so I know they have to be transparent and report things. So we are looking very much for continuation for Bitcoin. This is the path that we have had set out. If you guys want to join my Patreon and get on board with me, feel free to do so. There is a link in the description. We have done very well in terms of calls last year and this year, and are, making some decent returns, having made a number of pretty good decisions and calls recently. And long may it continue. Certainly, if this is the turn of a new market being ushered in, and there are certainly some signs that suggest that. Remember, there could still be a Black Swan-esque event, but I actually think that is massively bullish for equities, not on the event, but certainly post. All I've got for you in this video, guys. You enjoyed the content, like, always appreciate it. So as a comment, and look forward to seeing you all in the next YouTube video. Thanks a lot for watching, ladies and gents.